Jim Cramer talks about Tesla's first quarter earnings. Investors should know this. Jim Cramer, host of CNBC's Mad Money and correspondent for Squawk on the Street, revealed some insights into Tesla's first quarter earnings that every investor should know. Tesla Inc. stock fell 4% as the company prepared to release its first quarter earnings report. This decline was accompanied by below-average activity, indicating a scarcity of traders and investors looking to enter the market ahead of earnings. When Tesla reported big fourth-quarter earnings on January 26, the stock fell more than 11% the next day and fell another 4% the following day. Tesla reported revenue of $17.7 billion for the quarter, beating the average estimate of $16.4 billion. The company reported $2.50 earnings per share, beating the consensus estimate of $2.26. This wasn't a surprise to Cramer, as he fully expected CEO Elon Musk to wow investors during the conference call. As stock prices rise and fall, many investors appear to be on edge. What are Cramer's insights, and how can investors apply them? Keep watching to find out. In the United States of America, James Joseph Cramer works as a television host and author. He's a correspondent for Squawk on the Street and host of CNBC's Mad Money. Cramer was originally a hedge fund manager and senior partner at Cramer Berkowitz. Cramer also runs the CNBC Money Club and has stated that he founded the investment club to help all investors accumulate long-term wealth through the stock market. He is playing with an open hand and wants to insist investors make more informed investments in order to grow wealth over the long term. Jim Cramer recently told Mad Money viewers that sticking with what works will save you a lot of headaches. This implies investing only in companies that make money and pay a portion of those profits to shareholders, while maintaining a sustainable share price commensurate with their growth rate. According to Cramer, these requirements may seem overwhelming, but they are not as stringent as they seem and are the only thing that works. This does not apply to Tesla, even though it is not a dividend stock. In essence, based on Cramer's statement, it's an anomaly. Tesla stock isn't cheap, and the company doesn't pay a dividend, but its growth and success are undeniable. Tesla recently released its first quarter 2022 earnings, and both the top and bottom line results beat analysts' expectations. Automotive revenue rose 87% year-over-year to $16.86 billion. Tesla reported gross profits of $5.54 billion in its core business, pushing automotive gross profit margin to a new high of 32.9%. Regulatory credits accounted for $679 million of auto revenue for the quarter, according to Tesla's shareholder presentation. Revenue growth was driven in part by an increase in the number of vehicles delivered and an increase in average sales prices, and the brand is not slowing down. Tesla Inc. recently unveiled its new German electric vehicle factory, hoping to dominate the European market and aiming to expand its manufacturing beyond the United States and China. After the announcement, Jim Cramer stated that everything was falling into place for Tesla at the right time. "I think Tesla stock is ready for a big rally," Cramer said, and he's not alone in that opinion. Analysts expect Tesla to achieve an overall run rate of around 2 million units by the year. According to Cramer, Tesla also appears to have figured out how to deal with supply chain constraints better than competitors. Cramer also mentioned that the ribbon-cutting ceremony at Gigafactory Berlin highlights the company's de-risking initiatives with respect to China. This makes sense because China has been the backbone of Tesla's vehicle production for some time, and we all know it's not safe to put all your eggs in one basket. Tesla stock, according to Cramer, is an important leader in the electric vehicle industry. According to the CNBC host, Tesla makes the best electric cars. He compared Tesla's control over the electric car market to Ford Motor Company's dominance in the market. After the release of the Model T and Model A, Cramer stated that, quote, "Everyone has electric cars, but Tesla actually sells electric cars. We definitely agree because numbers don't lie." Tesla announced 310,048 vehicle deliveries for the first quarter. Earlier this month was the closest sales estimate the company provided. In the 3 months ended March 31, 2022, Model I and Model Y vehicles accounted for 95% of deliveries, or 295,324. And it seems the company has no plans to slow down. During the company's earnings call, Tesla CFO Zachary Kirkhorn and CEO Elon Musk claimed that they were confident that the company could grow at least 50% by 2021. However, due to COVID-related shutdowns, the company lost nearly a month of construction volume in 2021. Shanghai will need to ramp up production to achieve its goals. Quote, Kirkhorn added, "We have resumed limited manufacturing and aim to return to full production as soon as possible." Despite the slowdown, Musk believes Tesla will likely be able to produce 1.5 million cars this year. He said customers who order now face a long wait, and some of their goods will not arrive until next year. Musk also admitted that progress on autonomous driving has been slower than expected. In the first quarter of 2022, Tesla's solar deployments fell by more than half to 408 megawatts compared to the same period last year. The company installed 846 megawatt hours of lithium-ion battery energy storage systems, up 90% from the previous quarter, but down from the previous year. Tesla attributed the decline in solar energy deployments to delays in importing specific components beyond its control. Cramer advises investors to prepare for the upcoming turmoil because the second quarter is off to a rocky start. Things may get worse before they get better. Tesla Shanghai, on the other hand, made a strong comeback after its quarterly release. Bearing the fact that we're missing a few weeks, he believes we'll see record weekly production from Tesla's Shanghai facility this quarter, despite any new hurdles that may arise. Analysts expect sequential growth to rebound significantly later this year, especially in the second half of 2022, according to the company's fourth quarter statement. Production levels will improve at the existing plants, while production at the new plants will begin in 2022. The company's German plant has already started production. Tesla stock was on an unusual winning streak last month. The stock rose in March despite the threat of inflation, rising commodity costs and raw material prices, and rising interest rates. Tesla appears to be benefiting from the recent rise in oil and commodity prices as well. When Tesla raised prices, it demonstrated its price leadership. On the other hand, Tesla is trying to meet increased demand rather than reduce it. According to Electrek, Tesla's order books in the US are full until 2023. However, May was not very good, and it appears that Cramer's predictions are starting to come true. Tesla's stock price is currently around $700, which may be surprising considering it was $1,000 just moments ago. Tesla's stock price has certainly fallen due to CEO Elon Musk, who spoke in the Financial Times. The future of the 2022 car yesterday covered a variety of topics, any of which may have drawn the ire of investors recently. What did Musk say that caused stock prices to fall? According to Musk, Tesla sales are on the rise, and the company's cars are now more popular than the classic Ford Model T. He also stated that he intends to drive a Tesla for as long as possible. Finally, he said it is not unlikely that Tesla could buy a mining company to ensure it has access to minerals such as nickel and lithium, which are essential for the production of rechargeable batteries for electric cars. For now, Musk and Tesla are focusing on developing and selling electric vehicles, leaving the challenges of sourcing the raw materials needed to manufacture batteries to battery suppliers like Panasonic. Tesla sales rose significantly with profits of more than 650% compared to the previous quarter. Tesla has now had 11 consecutive successful quarters, with profit margins nearly double its biggest auto rivals. Well, buying a mining company might sound like a good thing on paper. If Tesla buys a metal mining company, it will incur more costs and have to learn a completely new business strategy. It will risk diversification because it invests in areas where it is not strong, such as setting up giant factories and producing 1 million cars a year and rising, as well as areas where it is not strong, such as mining. However, as Cramer mentioned, Musk really knows how to sell electric cars, and if anyone can make this work, it's him. What do you think about the possibility of Tesla buying a mining company? Comment below.